Hi, ladies and gentlemen. Good evening. This is Sriram here, and welcome to the 95th TLR show. TLR shows are brought to you by TLR Now, a niche coaching, training, and mentoring firm who are very closely involved in enabling transformation in individuals. So that's a bit about TLR Now. And before I get into introducing the guest for today, I want to share a bit of excitement I have because of the topic. It's going to be about reimagining banking. And as somebody who started his career in banking, and that was way back in the 90s, uh, there's a sense of nostalgia. And also, there is a sense of, how should I put it, a sense of bemusement with which I see banking today, because it is so different from what was there probably just two and a half decades back. And with that, I have a very special guest today, Aditya Khandekar, or Aditya as he prefers to be known. Now, Aditya is somebody I have just been interacting with for a short while now. And as we spoke about what he did throughout his 24-year career, uh, it was extremely fascinating and exciting. And the way I see it, it's been a tremendous roller coaster ride in a way. And as I see it, his entire career is a nice it's a nice strong table, if one were to call it, with four very strong pillars, which is built around technology, finance, strategic consulting, and data analytics. And I guess in a way, that experience is what has helped Aditya be come to a stage where he's the president at Corridor Platforms. And I thought it would be better to let Aditya talk about his journey and how has he seen this 24-year journey evolve. And Aditya, welcome to the show, and all
Thank you.
yours. I mean, talk to us about your journey, and it could be, in a way, it is the introduction that you are doing of
Sure,
yourself. Yeah.
sure. So, like a lot of folks in my 20s or early 20s, I wanted to do a lot of stuff in the computer science, computer engineering. So, I did my computer engineering from Pune University, and I got my first job in Bangalore in Motorola, which was a fascinating company at that time. They were at the peak of their life cycle, and I was working quite a bit in the network layer software, designing work and coding. We were coding in cross compilers, really enjoyed it. But 2 or 3 years into it, the sense I got was, wow, this is all cool, but I do want to see the bigger world of how we create impact and how do we create impact in business. So I decided to get my MBA. I went to the US. I'm short circuiting a little bit here, but I got my CFA charter holder certification. So I kind of went from core tech to business, and I knew finance was an important leg in that. So the CFA charter holder definitely helped, and I went after that into a startup and spent almost 10 years there in the US. It was called Tilisma. Fantastic journey for both the ups and the downs, right? So we were right there in the worst situation possible in year 2000, and you know it's sometimes revealing to tell about down times too, right? To test your character. So I remember sitting in a conference room and with some of the smartest people who were my mentors, the chief operating officer, the CEO, the CFO, and I was an analyst, and we were sitting and remodeling the entire business model of the company on a spreadsheet and deciding how many people we'll need to let go. That was probably my best MBA class ever, right? So got my first taste around strategy. So I got the tech, got a finance role, and then business strategy. And as I continued to kind of be on the quant side, I I really started to get deep into impact that data analytics can create for businesses, right? So with that said, again, shots moving forward quickly, I was MD analytics at Fiserv, and this is not the pharmaceutical one, by the way. This is the
Sure.
one that does a lot of transaction processing for banks that they have SaaS on the cloud systems. So I came on board there, and they had a big initiative at that time to take all the data that they were collecting across all their core banking platforms and saying, well, can we provide value added insights on top of that, right? So they wanted to have a cloud delivered offering for data analytics. So literally that was 2014 or somewhere around there, where the scope of it was analytics as a service. So we went from delivering software as a service to analytics as a service, and it was a fascinating task in all aspects: business, orchestration, technology, to get all of this stuff together. And we successfully launched and got a couple of clients right off in the first year itself, tier two banks, community banks in the US. That experience was phenomenal for me too. And I ended up after that getting deeper into pricing analytics, relationship loyalty, and pricing analytics at Zafin, where I actually built out the data-driven product along with a very talented crew of folks. Right after that, I kind of moved more towards credit risk or risk management, and I was a chief analytics officer at Synaptic, and today I'm at Corridor Platforms as president. And the role here encompasses right from kind of being a subject matter SME or subject matter expert on analytics, solutioning for clients, client management, and also building our teams that we have for the tech and the data science. So this is it is it is kind of rounding out a lot of these things together, and find myself a phenomenal mentor in Manish Gupta, who's the CEO of the company based out of New York. So that's my at a high level. That's my journey.
Interesting, interesting, Aditya. I think that's been uh, it's been sort of a very interesting mix, if I would call it. You know, right from the time you were in Motorola to the time you moved into the the business side consciously, and then
Mm,
you moving on to the US, getting yourself qualified, etc. And as you started working with clients in the banking space, financial services space, and this happened pretty much early, I guess. Uh, that brings me to my the first question for this
yep.
session, if I could call it, as far as the topic goes. In your view, having spent about close to probably more than 2 decades in the financial services banking arena, how have you seen this entire industry or domain, so to speak, evolve? If we typically take the typical 30,000 feet view, and we try to slot it as a 1.0, 2.0, 3.0,
Sure.
or probably a 4.0. I don't know if you're a 6.0 or a 7.0 today. How would you see the industry evolve?
Sure. Yep. I'll try and shorten the history part of it and see kind of where we are, because that's the cooler part. But when you look at banking 1.0, it's interesting. The word banking is supposedly the word for a bench in Italian. It comes from there, banco, I believe. And supposedly in villages, bankers used to sit on benches and conduct business. Right? That's where the word came from. Okay. Um, the bank 1.0 was primarily around the innovation. There was computers were able to process a lot of things, systems, middlewares, operational processes being done on computer. That was the big jump from hand to hand banking to kind of the next step up, right? But the key theme there was, I use the word linear. So we went from bank 1.0 was linear, bank 2.0, I'll talk about that, spoiler alert, was non-linear, and today are 2 and 3. And as we sit today in bank 4.0, we are talking about embedded banking. So spoiler alert on that one. So it was linear. Linear in what way? So if you needed to acquire 5,000 additional customers, you had to open so many more branches. You had to have so much of middle office and back office processing engines to be put in place and people to run those systems, right? So everything was linear in banking. Right? As we moved into Bank 2.0, the biggest innovation, Shri, was the whole self-serve concept in some form and manner, like ATMs. So the first time the bank said, well, you need not come to the branch. Why don't you just go to the ATM? You need to withdraw money, go to the ATM. You need to change your password, go to the ATM, right? You want to look at your balances, go look, do it at the ATM. And as the ATMs became more and more sophisticated, they became essentially your personal branch in a box itself, right? So that was the big innovation in the Bank 2.0. The whole notion that everything does not need to be done in the branch, and there's a concept of self-serve. Of course, the hybrid nature of banking still remain. So if you wanted to get a loan, well, you sat with the loan mortgage officer for a couple of days. So the inefficiencies that were there in banking 1.0 was still flowed up or leaked into banking 2.0. Then we had the phase which I think starts to get really cooler now, bank 3.0, right? There, the biggest innovators were the emerging markets, Africa, Latin America, India, Southeast Asia, where they simply jumped from branch right to mobile, right? And completely non-linear. So now we're talking about the non-linear element of it, right? So the just capturing a large proportion of people, getting them into the into the banking fold through mobile banking or online banking was a huge disruption in the marketplace, right? And then there was quite a bit of innovation in the payment space too, right? When all of this was going on. And also there was more and more emphasis on we got to know what customers want. So banking became broadly more customer centric. Banking 2.0 and 1.0 was you follow us. You want a loan, you come to us, you follow our processes. Banking 3.0, as competition increased and you had more choices as a consumer, then it came to be about, well, I've got to cater to their needs, right? So the contextual element of banking, including lending, and of course a fair bit of innovation in the payment space, right? Online P2P, merchant POS, in-app purchases to some degree next year, right? And I think that's where we were as we in banking 3.0. Banking 4.0, which is the coolest part of that thing, where we sit today, the personalization has been upped to hyper personalization. Now we want to be embedded banking. So Shriram's wife bugs him and says, "Well, go buy a new fridge." Shriram goes and is ready to make the purchase, and he gets a buy now, pay later offer to right there and there to pay that fridge in installment, six installments monthly each. You've in your that particular customer journey, banking has seamlessly embedded itself in. That's hyper personalization, right? You want an installment loan or you want to consolidate your debt, you go to an aggregator site, you get 5 or 6 contextual offers that you can bite on. You have choices, right? So we just amped up quite a bit on hyper personalization, right? The other big, and there are a couple of trends here, so if you I'll just go through a few of them.
Sure.
The other big one is this whole open banking standards. Now they are still coming through. Some areas of Europe have advanced further, North America relatively less, the whole privacy concerns. But the idea again is about choices. So I am not tied to my banking institution is the concept there, right? More and more, third point, more and more use of AI. So whether we're doing know your customers or KYC, fraud, underwriting, customer management decisions, collections would be an example there. You're using more and more AI. Lot more decisioning overall in banking 4.0 is being done in real time, right? Sophisticated, hyper personalized, real time decisioning. Couple of other areas, lot more use of alternate data. So inclusivity is huge in 4.0, right? And sometimes bureau data lags behind or results into a certain strata of population being left out of credit, right? So the more and more use of alternate data, and I'm speaking here obviously in the context of consumer banking, but if you look at corporate banking or wholesale banking and others, there are other sources of alternate data, for example, to be used for KYC and things like that, right? So
Sure.
larger use of non-traditional data, non-traditional banking data being used to make banking decisions. Lot more partnerships and disintermediation there, right? So for example, I've got a few examples quoting here. So like Kotak Bank tying up with Pine Labs to offer point of sale service, HDFC with Paytm, or Punjab National Bank with Lending Card, right? In the US. And it might be now more and more that you're not necessarily talking to the bank all the time. You could be, so in the US, for example, SoFi, which is a big online lender, ended up buying a small community bank in San Francisco called Golden Pacific Bancorp. You haven't heard of that name, I know, nor had I, but they got a banking charter, and as a result, they got access to kind of low cost deposits, right? So you're seeing all of those happening. So there's blurring of lines here, and who is the entity owning the customer relationships? Then you also got these tech firms coming in, banking 4.0. You got Amazon coming in. Walmart just came out with the news about opening up in, or they already have in store banks, but they're amping up even that aspect of it. So there will be a bank with retail presence across, a huge number of their warehouses. And then you've got pure digital banks being put up with completely a digital footprint, no land footprint, payment processing and such, right? So banking 4.0 is pretty exciting on, I would say, at least 7 or 8 major dimensions here. Okay, I'll stop here.
Sure, sure, Aditya. Thanks. I think that uh, that is pretty interesting when one looks at the journey across these four phases. Uh, what struck me based on what you were saying, where the aspect of convenience, because it complete. I mean, the entire banking model in a way has completely changed today.
Yeah.
Gone are the days when you would have to go. So there is to the bank, and wait there for some services to be extended to you, or you need to obtain a loan, etc. So there is very high levels of convenience, and there is very high levels of choices also today,
Yes.
right? And the third element for me that stands out based on what you said is also, if I look at it from a banking industry perspective, a challenge, right, for
Yes.
the banks, right? Because today your competition could be anybody who has access to technology, anybody who has access to probably data, right?
Yeah. and and
And
last and last mile relationships like a
and last
Walmart.
yeah,
Mhm.
and a last mile relationship, which again need not be a brick and mortar kind of relationship. It could still be digital,
Correct. Correct.
right?
Correct. Correct. Correct.
So that in a way is, I mean, if I step back and see, it's in a way a sort of a contradicting scenario, so to speak. You have these banking institutions, and I'm speaking generically here, it's not specific to a particular geography. Most of the banking institutions have been around for a long time. Some of them have been around for hundreds of years. So you have these huge institutions who've been running their businesses to the best of their ability and doing a great job of it, having gone through so many changes. On one hand, they have these huge strength, right? In terms of reach, in terms of their brand value, in terms of their offerings, propositions, and what have you. And on the other hand, they still need to catch up in a way with what is happening vis-a-vis competition with these institutions, or with these entities which are coming from a very different industry, right? And probably the very principles of banking are changing. So, in your view, uh, how do you see this? And if we take lending as a specific
Sure.
dimension,
Sure.
how do you see traditional lending metamorphosize or recalibrate itself vis-a-vis digital lending?
Yeah. Yeah. That's a good segue there. So just building on what I said earlier, one of the things is digital lending is at the point of need a lot more. You don't have to go to a branch, right? You don't even sometimes have to go to online banking. You could be, literally offers being made at the merchant. So BNPL being an example of that, right? Leading to, of course, strong positive customer experience. So really, banks or fintechs, specialty lenders, there are focusing on point of need and instant gratification of lending. So decisions being made in milliseconds versus multiple days, right? That's a huge difference between traditional banking and digital banking, or traditional lending and digital lending, right? Second is, generally speaking, data is better, higher quality. You use proxy data. So what's in your shopping cart? I speak to folks in Amazon, and it's at a high level. That's a good example to give, actually. your shopping history at Amazon, the types of purchases, what types of goods you use there, what kind of what's your payment behavior there, return of goods. That proxy data can also be used to make decisions around how much credit I give you, and these are good quality indicators, right? So the ability to kind of have that data to make better quality decisions. The second aspect of digital lending is a lot more options. You want to get a platinum credit card, you go to an aggregator site, you got five very credible offers. And not only for folks who can in the credit spectra, not just the folks at the upper end of the credit spectra, the low risk customers, but even medium risk customers have a lot more choices, because when you look at the institutions that are underwriting, they cater now in a digital space. They can cater for markets that are, let's say, we use the word prime or just prime customers, right? So slight at the middle of the credit spectra. So you're seeing
Sure.
a lot of that matching also happening, not just for the best customers, but also average credit profile or just below average credit profiles. There are firms that are specifically catering credit products for them, and that is a big element of digital lending. That's innovation that you're able to bring to the market very quickly. From a bank's perspective, the third dimension I feel is enormous amount of cost savings. And if you compete correctly, whether you're a fintech or a bank, you can potentially get higher win rates, you can get better pricing power, you can do risk adjusted pricing. So the whole sophistication of meeting the needs with a plethora of offers to choose from at price points that are affordable to your customers is essentially a big element of the innovation that digital lending brings to the table. And also all of this stuff happening in hypertime, right? That is actually a very big element of the differentiation between traditional and digital lending. Yeah.
Sure. That's interesting, Aditya. I think that was pretty insightful also because it's happening in real time, right?
Mhm.
And you also spoke about proxy information or proxy data. And I think the huge advantage for anybody in the lending space that I see is not just the sources through which you get the data, but
Yep.
also the quantum of data that you get, so that it becomes a reasonable point on which you can base your decisions.
Yes.
It's not a one-off instance. I mean, my history on Amazon is going to be it's going to be a substantial number of transactions. There's going to be a substantial number of payment methods, right? So the input that goes into my decision making engine, so to say, is much more stronger because it is built on repetitive purchases. It is built on it's
Correct.
built over time. I think that's a huge advantage as compared to the traditional days when probably most of the customers
Wasn't
who were
available,
kind of,
period.
yeah, it
Just
was
wasn't.
not available. and
Yeah.
and I still remember the days when I was in the retail lending space, and we would wait 24 to 48 hours for a credit bureau report to come.
Yes.
There would be one file that would be sent from here, and then
Yeah.
there'll be
Yeah.
responses, and there'll be probable matches that we would have to manually sit and check if it was the same Aditya
Yeah.
Khandekar who applied for a loan, and the one who's there on the and Aditya K would be on the database. So
Hopefully, you
then
had
it
the right person also there, right? Because there could be
yeah,
a bunch of them,
yeah,
right? Yeah.
there
You
could be
got
a
your
bunch of
KYC
them,
correct.
and
Yeah.
yeah, and then you
Yeah.
kind of cross your toes and fingers and end up sanctioning the loan. I think it's a huge change from those days. But
I do
that's
want to make
sure,
a quick point.
sure.
On one hand, as you have a lot of this digital data coming in,
Hmm.
there is a flip side to it, which is
Sure.
this whole concept of fair lending
Hmm.
compliance, right? So when you get all of this data, and if regulators, whether internal or external, deem some of this data to result into either explicit or implicit bias, that can create a problem. So I always say, like, yeah, a lot of data, you can use all of this stuff, and you can make quality decisions and a win-win for both the consumer and the bank. But be very careful. Some of this data might not meet fair lending compliance or might result into creating biases. And you have to be careful about the usage of such data and do a lot of testing on that before you actually use it. Now, the Amazon example we gave seems fair because these are all Amazon customers who are probably getting a JP Morgan card. So there's enough data about them in the system, and you can tell regulators that this data would meet a fair lending compliance requirement, but that might not be true for everything. So you have to be that's the caveat around additional proxy data. Make sure that you're still in compliance, because the reputational damage and regulatory damage can be pretty strong if you're not careful about that.
Sure, I think that's a valid observation, Aditya. Thanks for that. And moving on, Aditya, I mean, taking
Yep.
this entire example that we spoke about in terms of lending and the competition from the non-traditional lenders for the banks per se, whether they are the top tier banks or the second tier, third tier, etc. What in view are the biggest challenges that they are struggling with today
Yep.
as they battle with this? They have they have a customers, they have a brand presence, and they have offerings, and they know that they have to sort of get on with the game, and they need to be pretty quick about it.
Yep.
But
Yep.
uh, the way the fintech space is evolving, and you have the traditional players coming in,
Yep.
okay, it does seem that at some point in time, or at various points in time, if I dare say, the bankers were kind of caught uh, in a space where they probably were not prepared for it,
Yes.
right? and
Yes.
and they kind
Yes.
of probably an opportunity was lost, probably a customer was lost. So what in you are the biggest challenges banks face, solid institutions that they are,
Yep.
when they try to maneuver around these changes?
So it's interesting. It's interesting that in an environment like COVID, we saw last 3 years, and well, still not done, unfortunately, but coming light at the end of the tunnel there. As I say, when the tide lowers, the rocks stick out. So in some senses, inefficiencies in banks really stuck out during this period, right? Against specialty lenders, against more innovative, more aggressive, you know, uh, and not just lending, but just overall digital banking, right? You couldn't go to a branch. You couldn't go meet your relationship manager, even if you were doing it, from a wealth perspective, right? So on and so forth. So it just accelerated the entire digital transformation wave period, right? So at a high level, when you break this out into front office, mid office, and back office, in front office, a SoFi, right, or a lending club is able to very rapidly close decisions where they've reimagined and executed, more important, the entire life cycle of lending digitally, right? So the whole front office got completely digitized, and banks were maybe hybrid there, a little bit. They definitely were moving in that direction. Some of them were caught flat-footed because they weren't there fully, and then COVID hit, right? So that element is a challenge. From a mid office perspective, we look at decisions, and that's also an area that Corridor plays in, and I'll speak about that in a few minutes. From a mid office perspective, decisions around pricing, term, amount of loan and the product structure, or which product, have to be done very quickly. If a tier one bank today, some tier one bank X, if it's taking 3 to 4 weeks to make a pricing change, whereas a lending club or a SoFi or an Affirm, these are US fintechs, Afterpay, if they're making a change within a couple of hours, well, you have a competitive disadvantage right there, right? And remember, more and more consumers are doing cherry picking. They don't want to bank with the largest bank with the full service offering. They're happy to have 3 or 4 different relationship for card, relationship for personal loans, relationship for auto loans, and a relationship for liability banking like your payroll account. They are happy to do cherry picking on best of breed, right? So in that sense, being able to make decisions nimbly, quickly, contextually, in real time can be a real differentiator. And if you're not able to do that, you will find customers segregating their banking into silos and doing different parts differently, and very happy with managing multiple banking relationship. I think the whole
Sure.
millennia generation, there's a big fundamental switch that show me value today, right now, and I don't care what your name is. That's the mindset, right? Now,
Sure.
I know I'm putting a bit of a rhetoric on it, so not everybody's doing that. Maybe you're not doing it. Maybe I'm not doing that. But But I would say this is a trend that is there to stay and going to be expanding, right? So best to breed cherry picking, and I think from a mid office perspective there, and then from the back office perspective, so, and I do want to take an example because it just begs it, right? So,
Sure.
and I'll come to that in a second. So on the back office side, banks have usually funded their loans to their deposit base, but now with the area of securitization coming in, you are actually able to take tranches of loans that have been originated, package them into financial instruments, and sell it in the marketplace to investors who have appropriate risk appetite. And not all of it is low risk. There will be investors who are happy with high risk, high yield kind of debt, like some say student loan debt, right? So you're also seeing matching of loan tranches in different risk buckets to investors who are willing to take those loans up. So that improves in some sense the inclusivity element also. So you're seeing fintechs getting more and more asset light in that sense, right? Unlike
Mhm.
banks who generally don't securitize, they usually work off their base and in interbank lending and more traditional sources of funding. If we have a bit of time, I would like to take an example. I think it just
Sure,
begs an
sure,
example. Okay, all right.
sure,
So
sure.
here's
Please.
here's a firm called Afterpay in the US, and I just put down some notes here, so I'll just very interesting play, right? So they have a proprietary AI-based AI platform for underwriting, and they help originate credit. They have the standard messages you would expect such black box AI credit providers to have, like higher approval rates, lower loss rates, and with a very strong degree of automation. But here's the interesting part: they don't just underwrite the loans that the bank is providing them as lead. So the lead comes in, they say, well, what do you think after pay? And they say, well, this is what I think, yes or no. In some instances, the lead will come to Afterpay, right to their website, and they will make that decision and have a bank underwrite it. So the lead going from bank to Afterpay, it reverses itself on its head. It goes from Afterpay to the bank, right?
Okay.
And here are these elements of innovation. And I just talked about the securitization in the back office. Let me go into that a little bit. It's
Sure.
interesting that you know 77% in a particular quarter recently, 77, 70, they're a public company, 77% of their loans were actually purchased by institutional investors having different or having varied risk appetites in the spectrum, right? And 21% of the loans were retained by the banks. So the model flips on itself. Folks are coming to firms like Upstart and Afterpay, and then the loans are getting funded, and then the servicing happens at the bank side, right? So the model is, in some cases, switching over, right? In that sense. So those are some of the interesting lending business models that are coming into play, which go way beyond what banks have imagined in the past. And banks have to now either adopt it or find ways to integrate. And in this case, Upstart, they've been able to integrate with banks, and they cohabitate with each other. And I think that's pretty
Sure.
powerful. Yep. Okay.
Sure. Sure. That's interesting, Aditya, and I think that's the way I think the way it would work, cohabitating with the various stakeholders, if one can call them broadly,
Yep.
because each brings a specific perspective to it. And going by what you said about people cherry picking, etc., I think the very notion of transactional banking, I think, is spinning on its head now.
Yes.
I have different folks whom I can transact for a specific purpose. It's not that I stick to one institution per se.
Yep.
So depending on my experience, convenience, and probably the relevance at that point in time, right? Because it's online, is real time. I just enter into, again, the same concept of, I just cohabit with that per individual as a consumer for that particular transaction.
Yes.
And I just step in and step out. It becomes that much more easier for me to do that. And I don't have four or five, I don't mind four or five institutions, around me. And
Correct.
I think that's a very phenomenal space for a consumer to be in. And at the same time, I think it's a very challenging space for the banks to be in. One question that we had, Aditya, that came in from Sanjay was
Yep.
in the context of hyper personalization that you spoke about. And his question was, uh, is this really hyper personalization that we are seeing? Because today, unfortunately, there are instances where the bank, the banks or the individuals from the bank, they just chase you around in probably every place, and it kind of becomes a pressure point for both the banks because they need to be going and getting that business, and it becomes a pressure point for the consumer because he or she feels that they are constantly bombarded.
Yeah,
And to a great extent, I agree with Sanjay because I too keep getting about 8 to 10 calls a day from institutions,
yeah,
and in some cases, it's the same institution, but there are different people calling in.
yep.
So this is one of the flip side of this entire hyper personalization space. And how do you see the you spoke about regulation, you spoke about compliance, etc. How do you see those elements fitting into this in when when a consumer encounters such kind of scenarios?
Yeah. It's a good point. Good question. So, Sanjay, one thing that I would like to make a note on the question you raised, that salesperson of a bank chasing you at the mall is actually not hyper personalization. It's actually the most brutus form of blunt marketing or blunt sales, because he has no clue about your banking relationship. Well, he might know that you're an HDFC, oh, sure, Bank X. You're a customer of Bank X, and you get calls. They do not know your banking footprint. To me, that is actually not hyper personalization. Hyper personalization example to me is you log into your online banking or mobile banking. You just got your bonus check. The bank has detected that your balances, your 3 month moving average versus your a sudden blip in your sudden good positive blip in your banking balance implies that you have certain cash that can be parked away in a short term deposit. It makes an attractive offer to you. To me, that's hyper personalization, right? Or I've seen activity that you're looking at online sites and YouTube videos about car purchases, guilty as charged for the last couple of days, and the bank makes an bank makes an offer to you and says, okay, here's an auto loan offer for you, right? So I would say those are examples of hyper personalization, and I think more and more to the other part that you raise, you're going to see, and we are working with clients where we're seeing some of that is regulators are coming down hard and saying that we will start fining you if the customer says do not disturb me and you do disturb. Then you will find, whether it's in a prospecting environment or a customer management environment, that means you're a customer of the bank or you're just new to the bank, you're just shopping around or fishing around on a website. If you get bombarded and you get too many calls, then and you say I do not want to be called, then that can lead to regulatory fines. So we're seeing situations where regulators are coming down hard on those type of scenarios, right? It might just take a little bit of time for uh, India to have very strong regulation in those areas, but definitely I'm seeing that in the developed markets.
Sure.
Okay. Yeah, and you
Yeah,
want to talk a bit around the regulation piece, right? Should I just take that part?
yeah, please.
Okay. So it's interesting that Europe is taking actually a big front foot around regulation of AI. So in May of last year, they came up with a proposal which, after appropriate review by government bodies, and it was a broad base, it wasn't for banks, it was for all industries. It will be adopted into law across the EU. And I think they are front runners in that from that perspective. And what they've done is, interestingly, as part of the draft paper that they have floated out, they're serious about this, is they've said AI is systematic and affects the lives of people. So we're going to start regulating AI and AI driven decisions. We're going to put everything into three buckets, me as in they. So
Sure.
they put AI into three buckets of unacceptable risk, high risk, and limited risk. So if you're doing social scoring on Aditya and Shri, that would be just like, don't do that. And if you do that, you cannot conduct business in EU. So that is unacceptable risk, AI driven social scoring, right? Because that creates biases without the person who's being scored having any remediation against that, right? The high risk is they will be permitting that. And some examples just to bring that to life is like credit risk, the topic of our discussion, lending, right?
Sure.
AI for recruitment, right? So are you carving out certain strata of population for certain jobs just because your AI engine potentially could be biased? These affects people's lives, right? So from that perspective, this has to be regulated strongly. And the last one is they call it limited risk. So if you have a spam filter or marketing programs, segmentation programs, those are considered limited risk. So they're saying all AI that industries are putting will be put into unacceptable, which means stop, high risk, and then limited risk. And especially, and again, the focus area is obviously high risk. And some of the areas that we're really looking at are you need to have robust risk management systems. So regulators are now explicitly asking for that. Now, remember, banking always has had that. So let's put that, let's be clear. But it's a lot broader now in that sense, right? Data governance, audit trails, and record keeping, robust monitoring, compliances, and transparency on how you make decisions. So if I'm denying Shriram a loan, I need to be very clear, be able to, if 3 years from now, if the regulator came back and said, well, show me in 2021 when you, let's make me the guinea pig. I was rejected a loan. The bank would want to know why I was rejected, and somebody with similar credit profile like me was hopefully is also rejected, and you have to rationalize your decisions with a set of codified strategies that you can clearly show systematically were applied to make the decision. There was no explicit or implicit bias, right? So all of this transparency and ability to monitor the AI, so that even if your AI is doing good today, if it starts to get biased downstream, you need to be able to track it, monitor it, set up duct tape rules, or retrain your AI. The banks, now going back to banks, have to have systems to be able to do that, right? So that's kind of one of the big movement around regulation of AI across spectrum. And of course, banking will just continue to do more of what they're doing today, essentially. Yeah.
Sure, sure. I think that's interesting, Aditya, I want to now touch upon since we spoke about regulation, and you brought in the element of AI and how AI is getting regulated. Okay,
Yep.
I just want to take it a little bit further from here in the context of AI itself. Okay, and understand from you on what is it that you have seen in your experience are the ways in which banks are applying AI? Okay, and what do you see, as probably the low hanging fruit, the typical low hanging fruit that uh, obviously there are banks which are kind of up the curve there, and there are still banks which are waiting and watching on how this will evolve,
Sure.
right? So,
Yep.
what do you think are, in your experience, as I said earlier, where are banks actually investing in AI? How has it been? How has the experience been? Where have they been seeing huge gains?
Yeah. Yeah.
And where are they still, kind of taking it a bit more cautiously? And of course, then there is the whole compliance that needs to built into AI, because
Mm.
I think so. And what does all this mean for a consumer? Because on one hand, anything to do with AI for a common person, even somebody like me, it all seems so exotic and exciting, and
Yep.
probably it looks like there'll be the best decision that would happen, and it could go against me, and will it mean if the system has decided I would have no mechanism to go back and probably um, challenge a decision? But again, as you said
Mm, mm, mm,
previously,
mm.
that there is some regulation that's going to come around that, and it will evolve at different geographies at different points in time. But
Yeah.
just wanted
Yeah.
to kind of understand from you, how is this entire AI piece playing out with banks currently?
Yeah. Let me break that question into two parts when I'm answering it. So first, where is AI seeing a lot of traction? And I'll try and give examples. I won't be MECI in the sense of fully exhaustive, but I'll try and give you headline examples.
Sure.
KYC, know your customer, anti-money laundering, fraud. So in that bucket, you're seeing lot and lot more application of AI
Hmm.
to make automated decisions around potential fraud. And
Hmm.
there is a concept called SAR, suspicious activity report. So banks are required to file SARs when they've crossed a certain threshold with the regulators, and they're also required to investigate those, right? So, so AI is being used in conjunction with process and people. So the AI does the first level of screening, and then those transactions that are deemed above a certain value, or let's say a medium value transaction with a high probability of fraud, you do that. Right now, you remember there's a recent headline example of $4.5 billion of crypto being those perpetrators being caught based on a $500 gift card that they purchased at Walmart or something. It's a
Sure.
very interesting story, but it was essentially the cryptos were stolen, and they came into light when AML was being, so they were laundering that money through the traditional banking. That's when they got caught, right? So AI got
Sure.
heavily involved in that piece, and now and the story just builds out from there. So
Sure.
that's one bucket. The second bucket that I see is obviously credit risk, lending, AI, and more and more automated decisioning on AI, driven off AI, is a trend that will just continue, right? The whole digital transformation, the pressure from competitive institutions, right? That's all playing out. So automated decisioning driven off AI for underwriting, for sure. When you look at the marketing or slash prospecting space, the up in the funnel, there with so much of digital data being available, institutions, banking institutions, whether that's wealth or consumer banking, doesn't matter. I'm taking two examples here, or even SME or SMB banking, are starting to use unstructured AI algorithms to find intent there, right? So if I can find intent, and I can target X number of leads from all of that digital activity that's going on, then that is very valuable to me, right? As a bank, I can start to focus on which potential targets I should go approach, right? In customer management, automated collections activity, where until it's below a certain threshold, being able to have the AI decide the remediation steps, text messages followed by something, followed by something, followed by a call, and just driven off the behavior patterns that we're observing, right? So because that's
Sure.
otherwise had been, as an impact, it had been a very laborious activity. You had this vision of, you at Standard Chartered, you would have had that vision of large call centers just phone dialing away. But that's
Yeah.
dying
Yeah.
down. That's going silent. You've got an AI doing that, and then only a subset of those are actually going up. I know we are running on a clock here, but
Sure.
those are some areas. Now, let me address the second part of your question. And I believe in trading too. So if there's collusion in trading, using AI to monitor unstructured chat messages to decide whether bankers are crossing certain boundaries versus somebody reading thousands and thousands of text transcripts every day. So that's another example in the trading flow, right, where AI is being used very
Sure.
effectively. What does the consumer have recourse on? Well, you have social media itself. If you felt that you were disadvantaged in some form and manner, you have the ability to just rant on social media and say, I believe I was not treated well. And that creates an impact in the marketplace because it goes viral. And the banks have to respond and be able to say, here's why I'd made that decision. But bottom line, customers have that as one recourse. The second recourse is there is a concept called adverse action reporting, which is the idea being that if you were rejected loan, the bank by regulatory requirements are required to tell you why you were rejected in plain English, right? And then you have the ability to appeal that. So there are a few others, but these are at least the top two that come to mind, where AI cannot run amok. You have the ability to make the bank responsible. And then when you talk about that European regulation I talked about earlier, those are just
Sure.
going to put even more and more controls in place, so you have less and less egregious behaviors, right? So yeah.
Interesting. Interesting. Aditya, I think it is good to see. You play out the response in terms of how does it affect marketing, how does it affect the lending per se, collections, etc. I think the application has tremendous potential everywhere,
Yeah.
right? But I think it again needs a lot of how do you put it, an ecosystem which not just accelerates the entire how do you call it, the adoption of AI, if one could call it, but also make sure that it is not just running efficiently, but it is also compliant with the norms that ought to be
Yes.
complied
Yes.
with.
Yeah,
I
and
think that's
there is a stick.
sure.
There's a stick there from regulators if you're not in compliance. So these are
Sure.
getting codified more and more. Yeah.
Yeah. Yeah. And moving on, Aditya, I think
Hmm.
we
Hmm.
have time for probably about two or three questions more.
Yep. Yep.
Um, in terms of, so there is this one piece in terms of what is happening in banking, in the fintech space, in the non-traditional lenders coming into the market, etc., etc. So that's one dimension of it: the consumer, the regulator, the institutions per se.
Yep.
The other piece is uh, the people working in banking per se, right?
Hmm. Hmm.
And the way their work or their job, so to speak, how do you see that evolving, right? And there are two parts to this question. Okay, the first is, as somebody who is in the banking space and who's probably just started off in the banking space, or somebody who's fairly seasoned in the banking space, how do you see them, or how do you see one kind of working to evolve oneself to be able to adapt to what all the changes are happening in terms of the roles, the responsibilities, and the functions that one is dealing with? So that's one part of the question. And secondly, for those young, and this is something that I would, it's a question directed at you, especially for uh, you providing some sort of direction and counsel for all those youngsters who probably are listening
Yep.
in terms of what are the kind of skills and capabilities that they would need to work on and develop if they want to make a solid career in the banking space or the fintech space. Because all said and done, there is one element of glamour that is attached to it,
Yep.
which probably gets spoken about, and in some cases, I dare say, only that gets spoken about, right? So there's one dimension to that. That's probably the carrot, if one could call it. And then there is another dimension in terms of the reality of one being relevant to what is happening around in the institution one is, or what is happening in the industry. So
Yep.
for these two different set of folks, what would be your insight or inputs, if we could call it, in terms of the entire perspective about how they look at their roles, the skills that they need to develop, how do they be nimble about what needs to be done, etc. That's an area I would love to hear from.
Sure. And I'll kind of focus on fresh graduates and also people with a couple of years of experience, right? But I think
Sure.
it's a spectrum. First of all, I would like to break this out a little bit because there's no
Sure.
one answer, right? So depending on roles. So high level banks have strategy roles, have operation roles, have quant roles, and have front office roles. And in the operations, I'm actually putting clubbing in the mid office and back office. Okay, so with that caveat. So let's start with the
Sure.
strategy roles, right? Rather than which schools you should go to and what courses you take, I'm talking more like from a bank perspective, what are the type of skills they're looking for, right? So that then you can map it. In a strategy role where digital transformation wave is transforming every element of the customer journey as well as internal processes, one big skill that people need to have is the ability to understand and map current processes at a good level of detail, and then be able to sit back strategy wise and say, if I had to do this again, how would I do it, right? So when you look at somebody like SoFi as an example, I'm just taking that. Social financing is a short form of SoFi. They probably sat back and said, well, current lending or even current incumbent digital lending has certain issues. So if you were to reimagine that entire process, how would we do it? And they essentially convert that into a differentiator. Banks need to do that again and again and again. Banks have an advantage because they've got so many customers, but your mindset now moves towards retaining those customers and at the same time being competitive in the marketplace against the fintechs, right, or other NBFCs or equivalents, right? So from a person perspective, having process mapping skills, the ability to sit back and re-engineer processes is very important. And attached to that is problem solving skills. So a lot of these are being done for the first time. You're working in collaborative, multifaceted teams and problem solving. You need to have the skills to be able to do that, because it's not like these have been written. These are not codified topics on which Harvard Business Review has presented case studies. These are happening in real time. You're coming up with innovative solutions. So problem solving becomes a very critical piece. Ability to map processes, ability to figure out how to re-engineer. That's on the strategy side, right? What's required as from a digital transformation perspective. To some degree and extent, those also apply to mid office and back office, right? Because they tend to be less visible jobs, quote unquote, or less visible activities and therefore less visible jobs. But the transformation of a bank for, let's say, digital is not just going to happen on front office. A front office without any re-engineering on the mid office and back office is a waste of time, right? So mid office and back office, the operations roles will have similar needs. Having the ability to figure out, just because I inherited this doesn't mean that this should continue. So critical thinking skills there, being able to say, and this might not be 100% full re-engineering from scratch, but more incrementally, what can I do differently and cut out the fat, cut out things that I used to do in the past, but I don't see the need to do this. If I was doing something on paper, I don't need to do this. If I was doing a step which doesn't make any sense anymore, then why am I doing that step? Having the ability to, especially in the managerial roles there, it becomes more and more important. And I think along there comes, accounting skills, number skills also become very important. Those are just bread and butter. But operation roles are also a key element of the overall transformation. On the quant side, I think there's a strong demand for, MBA in finance, people, FRM or equivalent, where you've taken special courses in financial risk management. Those areas also are attracting a lot of talent right now, because as we get more diverse with digital banking, customer base, competition, controls and monitoring are becoming even more and more important, and of course regulators are breathing down the neck in terms of consent orders and things like that. So every month you hear one bank getting fined for something, right? So control and governance functions are getting more and more beefed up. So people with quant skills, math skills, data analytics skills, and risk management skills have a strong demand in all of these functions, whether they are embedded in analytics groups tied into line of business, or you have the risk. You're seeing that on the front office side. The last one, I believe, strong client interaction, ability to articulate clearly, precisely, and simply the value proposition of a bank, especially if you, let's say, on wealth banking. That's very critical, right? Being able to look at a bigger picture of what a client needs, unmet needs, being able to articulate that and preparing a wealth plan in this example against that is also very critical, right? And I think related to that, you have ability to have, or skills around MS Office or accounting software, just the basic fundamental building blocks also required. But I think there's innovation and opportunity in the front office roles also, right? So I think these are some examples where I think, looking inside out from a bank looking outwards, these are the skills that are high demand.
Thanks, Aditya. I think that was pretty informative. Especially, I love the way you kind of broke it into these four
Yeah.
groups, so to say, right from strategy down to the middle, the back office, front office. I love the way you split that. That kind of brought out what is specific, and I'm sure the folks who are listening in, and those who would again listen to the recording, will find that useful. And uh, taking this a bit further, and
Hmm.
uh, I just wanted to, kind of, we spoke about at the beginning, we started off you outlining your experience, and what all you have seen and, worked on in a
Yeah.
variety of roles. So, how did your entire skill play out for you as an individual? because
Mm.
there is going back to those four pillars that I spoke about: technology, finance, consulting, analytics.
Yeah.
Obviously, the skill catch up game. And skills are always a catch up in terms of what is going to be relevant for tomorrow, the day after, etc. How did this play out for you, and how did you sort of plan that out, or was it all? I mean, was there a plan, or was it? Does it look like a plan now, or how did the whole thing
Now,
happen?
I think it definitely looks like a plan now in hindsight. If I said the other way, I would not be sleeping well tonight. Um, See, I always looked at roles that I wanted to play as every next role that I wanted to play as a theme. And by the way, when I say this, I don't mean to suggest everybody should do that, right? Each one to their own risk profile, right? And sometimes it's not just theirs, but also the family requirements and such, right? So with that caveat, I always try to play roles where 50 to 55% of the skills that I was looking for were there for me, and 45% was something that I was going to learn. So almost half of that was going to be, I don't know what the heck I'm going to be doing here, right? And I just had to have this innate optimism in myself. I won't use the word confidence, but more optimism that I will figure it out. So when I got into data analytics, let me use an example. I was not a formally trained analytics person. Like I was not a master's in statistics. I jumped into it because I had a sense of intuition. I had programming skills. I had math skills, and I was generally a quant in nature, and I still am. So for me, I said, all right, if I know that, can I learn quickly the skills on the fly, while at the same time I had the complementary skills of finance and strategy, so I could structure data products or analytics products, and I might not know every element of an algorithm at that point of time, or the process of how uh, predictive insights were being created. But then over time I picked it up and I just bootstrapped myself. So it's a risky strategy, but to me that was interesting. So that's how I want to conduct my life. So for me, it was either you do it that way or no other way, or or don't look for that role, then look for something else. I never wanted to be in a role, entrepreneurial or otherwise, where I knew 80% of the role and only 20% was new to me. That just wasn't fun for me, right? So that's been a constant theme in the way I've built my career. I remember, I'll give you a quick anecdote. I hope we're doing okay on time. I think we're just at the
Yeah,
hour
yeah,
mark.
yeah. Please go ahead.
Um, and this is not an analytics piece, but relevant. So I was in the US. I was working for this firm called Talisma. I had an Australian boss. His name was Wade Pfeiffer, super smart guy. He was an accountant, CPA, and had migrated from Australia to the US. So he was a little bit like in my mold, thankfully. And I was the financial analyst, and our controller then, financial controller, had just left. So he had two choices, and he had the choice of either hiring a well-bred CPA, been there, done that, and get him into the role of the controller while I continue to be the FP&A, financial planning and analysis guy, or he had the choice of taking a risk on me, and I had never played a controller role. I had played a financial planning and budgeting role, but I never played a controller role. So he sat me down. He said, "Well, Aditya, are you interested?" I said, "Yeah, I would be." I think that was the answer he's looking for. So he said, "You do realize that you have zilch skills in accounting, right?" I said, "Yes." But I said, "Have you?" And I have some sense of optimism in myself that if I can do a higher level activity of financial planning, I can figure this out, because this is bookkeeping. It cannot be that complex. And yes, I'm preparing financial statements. I'm doing global consolidation. We are presenting to the board, so I can't screw up just because I want to learn something new. But with you as my cover and some internal optimism that I have within myself, I can figure it out. And he told me, "Good, you got the job. I'm not going to find somebody else." I was hoping you'll say that. And he said one thing that has remained with me all through my life, which is, when you want to hire people, he said, "Aditya, I put about 65, 70% on attitude and only 30 to 35% on skill. So if I had to hire for attitude and skill, I'll take the former any day." So that was a big learning for me. I still stay in touch with him, and that mindset. He went on to become the CEO of a firm, and today he's a chief operating officer. He went from being a CFO to a COO to a CEO. So when I see him, I always, or when I talk to him, or when I see his career as it has panned out, I say like, yeah, I kind of molded my career on him, and in some ways he rubbed off on me on his, the way he approached his career.
Wonderful, wonderful, Aditya. I mean that's pretty insightful and at the same time pretty inspiring, especially the ability to uh, work with that 55, 60% and 40% uh, ratio that you spoke about. That it's more about what you don't know and you kind of figure it out on the way.
Figure it out.
To that extent, you need to be agile and you need to be kind of probably learn from those, make those mistakes, learn from those mistakes,
Yeah.
etc. Right? I think it's been absolutely incredible listening to that, and of course, it also brings out the fact that one needs a very strong mentor who's able to
Yes.
guide you through the journey. I think that's increasingly becoming important. It's always been important. It's just that it's coming more to the fore now. A lot more people are talking about it, and I'm glad you brought out that dimension also. And thanks, Aditya. I think we've come to
Sure.
the close of play, so to say.
Yeah.
And it's been a very, very insightful conversation. The topic, of course, by itself is extremely broad and extremely complex in a way. But if I step back and see, I think we were able to cover significant chunks of it, um, both in terms of the depth that a program of this nature would allow, and also the length of the topics. And thanks so much, and thanks
Appreciate it.
yeah, and thanks to all the people who tuned in and who were listening in to us. Sanjay, thank you for your question, and I hope the response was something that kind of addressed the concern that you raised. Folks, it's kind of exciting for us because this is the 95th show, and obviously that means the
Across this
100th
nation.
show is on the anvil. And it's been a very exciting journey for us to be able to bring you these shows. And trust me, the excitement will reflect in the shows that we are going to bring to you out in the future. Do keep following us on social media. We are on LinkedIn, Twitter, Instagram, YouTube, Facebook, and the works. And keep watching and keep engaging with us. We will be back with more exciting shows. Thank you so much, Aditya, and thank you all
Appreciate it.
again for listening in. Have a wonderful weekend and see you soon in the next show. Thanks
Thank you.
again.
Thank you. Thanks everybody. Thanks, Sriram. Great, great session.
Thank you.